We have a question coming in from one of our viewers, Siddharth. He's written in to us on one of the social media platforms, and he's saying, I want to invest in a thematic fund, but I'm unsure of how to choose one and where to begin. I think very simple, very basic question. It's exactly what we're trying to understand and answer, Siddharth. So, Ruchit, what would you say? What should be the starting point? You said that the exposure to any such theme should not be more than 15% of the portfolio.
Thematics as an aggregate should not be more than 20% of your total investment. And within that, not a single fund should be more than 10%. Or single fund stroke single theme. It shouldn't be more than 10%. So that's the broad thumb rule, I would say. So.
And what are the questions that you'd ask before deciding and checking yes on a fund?
So one is I would want to see whether the particular fund, whether it's an active fund or a passive fund. Okay. Second is between the active funds, is this more of a well-diversified fund? Because, one of the more interesting aspects of a thematic fund is, and this kind of gets missed out, is that why actually choose a thematic fund? If you like a particular sector, you can say, oh, but my fund manager already has overweighted the sector.
Yeah.
Perhaps. But what happens is that when you're overweighting, right, you still buy a very limited number of stocks. A typical portfolio is, say, 50 to 60 stocks. If I'm buying a particular sector, I may have 4 or 5 stocks, or maybe 7 or 8. Bulk of them, maybe 50% more, could be large capish or mid capish. You don't get an ability to play a diversified set of stocks. In a thematic fund, typically an actively managed thematic fund will have 20, 25 odd stocks, right? And it gives you a wide basket of stocks to kind of invest in. Like our energy fund, right? We're the same thing. It is not just your traditional large cap names, but there are 25, 30 stocks. Some of them we could have never invested or never looked at because we didn't have the capacity to invest. Now we have a thematic fund where we can invest in some of these securities. So look at that, whether it's an actively managed, A, B, is it a very well diversified fund or not? C is also, again, talk to your advisor, try and get an understanding that is this a theme that's likely to play out from a 3, 5, 7-year standpoint, and based on your risk appetite, you can choose a particular fund that suits your need.
Fair enough. Feroze, you want to add to that? Things to keep in mind?
Things to keep in mind is one, definitely, that how old is that theme? Like infrastructure. People, like he said that, Ruchit Saab said that you can't have more than 10% into one specific theme because you have to consider risks. This is the biggest anomaly or biggest problem which happened in 2008. Diversified fund had gone 50-60% in infrastructure.
Yeah.
Clients got so attracted and bought 30% more of infrastructure. I have seen a portfolio which had 92% infrastructure. Wow. And then 2008 happened. And you saw drops of 70% in that portfolio.
Yeah.
Right? Yeah. And Nifty fell 40-50%, but this infrastructure fell 70-80%. So point is, don't go very heavy. Don't go to a very old, popular theme. Now, for example, momentum for the last 2 years was a great theme. There are only 2 funds.
Okay.
That means it's not a rundown kind of a theme. It's not old wine in a new bottle, right? Energy. You don't have so many funds, right? So that's a newer theme. So always go for a newer theme. Okay. Consumption was manufacturing. Now, for example, transportation. There are 5 schemes of transportation, right? And it's the oldest one would be maybe 1.5 years back.
Okay.
So that means this is not still played out. So first thing which investors should look at is it a theme which is old wine in a new bottle, or there's something new which has been identified?
Okay.
Second, don't go passive, is my opinion, because the theme as a concept is top-down. Again, if you go top-down, buy the full index. Top-down plus top-down is not a very dangerous strategy.
High risk?
Very high risk.
Yeah.
If I'm buying a theme, then I will want Ruchir to actually filter down some very bad apples.
Do some, stock picking and get the best sort of companies in that fund, right?
And eliminate, even if you don't get the best, you have to eliminate those 5 bad ones, which don't have the right governance, which an index will not be able to. Index is a growth index. The better it does, the more weightage it gets. More weightage it gets, better it does. It's a chicken and egg story. So never go passive in a theme. I would rather trust a research house to eliminate those 5-7. They might reduce my return, but I'm okay to live without 2-3% extra, but I would not fund a business which is not compliant.
Pretty interesting. And
just to add to one more element, and this is very interesting, that most thematic funds will have a particular benchmark. And if you look at bulk of the benchmarks that are there, roughly 5 stocks, give or take, right, would be almost 70-80% of the benchmark weight. So if you go passive, you're essentially just buying 5 stocks. You're not buying a diversified portfolio. And therefore, active here makes a lot more difference, because you can say, look, I'm not going to buy a very large cap particular stock in the theme just because it's part of the benchmark. I can underweight it and buy a lot many more companies which earlier would not have been looked into.
I want to again add on, Ruchit.
Let me give you an example to amplify his point. Bank Nifty, very popular.
Yeah.
2 stocks are 57%. When you ask a person, I met a trader who says, I trade in Bank Nifty. I said, just take a guess, what are the top 2 stocks weightages? He didn't know. And he guessed 25%.
Yeah.
So point is, you might think, and this is a very widely traded index.
Yeah.
You ask anybody who's trading it, would not know that 60% is in 2 stocks.
Yeah.
So what you think optically is a lower risk, when you go passive, you're buying very few businesses.